Imagine earning money from real estate every single month without ever buying, managing, or maintaining a single property. No tenants calling you at midnight. No leaky roofs. No mortgage stress. Just pure, steady, passive income flowing in while you sleep. Sounds like a dream, right? Well, it's not. It's a reality. Because today, there are smarter ways to earn from real estate without owning any physical property at all. Welcome to the world of real estate without ownership. For decades, people believed that to make money in real estate, you had to buy houses, flip apartments, or rent out spaces. But the world has changed. Technology, finance, and digital innovation have opened doors that never existed before. Now anyone, not just the rich, can invest in real estate and build passive income streams. Let's break down exactly how it's done, how much you can earn, and why this might be one of the most underrated investment opportunities of 2025. Let's start with one of the most powerful tools, real estate investment trusts, or REITs. Think of REITs as companies that own and manage income-producing real estate, like office buildings, shopping malls, data centers, or apartment complexes. Instead of buying the property yourself, you buy shares of these companies. In return, you earn a portion of the income they generate, typically through rent. And here's the best part. REITs are legally required to pay out at least 90% of their taxable income as dividends to investors. That means if you invest in a good REIT, you could be getting regular income checks, just like a landlord without ever being one. You can invest in REITs the same way you invest in stocks. You just open a brokerage account, choose a publicly listed REIT like Realty Income, Simon Property Group, or Prologis, and you are in. The minimum investment? As low as one single share. You can buy it, hold it, and collect dividends all from your phone. That's the beauty of modern investing. Now, not all REITs are created equal. Some specialize in residential properties, while others focus on commercial buildings, data centers, or even hospitals. Data center REITs, for example, have exploded in popularity because of the rise of AI and cloud computing. Companies like Amazon and Google need massive storage infrastructure, and REITs that own those facilities are making huge profits. So if you're bullish on technology but want the stability of real estate, that's the perfect combination. Another growing opportunity is real estate crowdfunding. This is where multiple investors pool their money together to invest in large-scale projects that would normally be out of reach for individuals. For example, imagine a $20 million apartment project in Miami. Through a crowdfunding platform, thousands of small investors can each contribute $500 or $1,000 to own a piece of that project. When the project generates rental income or sells for a profit, everyone shares the returns. Platforms like Fundrise, Realty Mogul, and CrowdStreet have made this possible for everyday investors. It's like joining forces with hundreds of other people to own real estate collectively, but still earning passively. What is exciting is that many crowdfunding platforms also offer diversified real estate portfolios. That means instead of investing in one single property, your money is spread across dozens of projects, apartments, warehouses, office spaces all across the country. This diversification reduces risk and creates steady, long-term income potential. You're not just betting on one property, you're investing in an entire real estate ecosystem. Now let's talk about a newer, more futuristic way of earning from real estate, tokenized real estate. Thanks to blockchain technology, real estate can now be divided into digital tokens. Each token represents fractional ownership of a property. You can buy, sell, and trade these tokens just like stocks or crypto. For example, imagine owning 0.1% of a luxury apartment building in New York. That small fraction could still generate you a percentage of rental income paid out in crypto or cash without ever setting foot in the building. This is known as fractional real estate investing, and it is growing fast. Platforms like Lofty AI, Realty, and Reno are already making this possible. It's like the future version of REITs, faster, digital, and borderless. Another option is real estate notes and debt investing. Instead of owning property, you become the bank. You lend money to property owners or developers, and they pay you back with interest. That interest is your passive income. This can be done through online lending platforms or private note investments. And while it may sound risky, when done carefully with proper vetting, it can offer steady returns ranging from 6% to 12% annually. It is basically earning rent money without ever having a tenant. Then there's something called real estate exchange traded funds that invest in multiple real estate investment trusts. If you don't want to pick individual REITs, ETFs like VNQ or SCHH give you instant exposure to dozens of them in one single investment. That means diversification, steady dividends, and simplicity all in one package. Many investors love these because they are easy to buy, have low fees, and require zero management. It's the ultimate set it and forget it real estate investment. But here's where it gets even more interesting. You can combine these strategies. For example, you might invest 50% of your real estate capital into REITs, 30% into crowdfunding projects, and 20% into fractional tokenized real estate. That gives you exposure to different types of properties, risk levels, and income sources, all working together to create passive cash flow. And all without owning a single piece of physical real estate. Now, some people might say, but owning property gives you control. Sure, that's true. But with control comes responsibility, maintenance costs, taxes, and endless headaches. When you invest in real estate passively, you give up control, but you also give up stress. You're outsourcing the hard work to professionals while keeping the profits flowing. Of course, no investment is 100% risk-free. REITs can fluctuate with the stock market. Crowdfunding projects can take time to mature. And fractional real estate depends on platform reliability. That's why it's important to research, diversify, and think long-term. Passive income doesn't mean instant income, it means steady income. The goal is to build a system that works for you while you focus on other things in life. And let's be real estate is one of the most proven wealth-building assets in history. It's created more millionaires than any other investment category. Now, technology has made it accessible to everyone, not just the wealthy. You don't need to buy a $300,000 apartment to start earning rental income. You can start with as little as $10, $50, or $100. The key is consistency, patience, and smart diversification. Imagine this. Every month, your REITs pay you dividends. Your crowdfunding projects send you profit distributions. And your tokenized real estate sends you small rental payouts. Together, they add up to a stream of cash that grows over time. That's the beauty of passive real estate income. Money that works harder than you do. And here's the real secret reinvesting your earnings. Instead of spending your dividends, put them back into your investments. That's how compounding kicks in. Your money starts earning money on top of money. Over time, even small investments can grow into massive streams of income. So if you have always dreamed of investing in real estate, but thought it was out of reach, think again. You don't need a huge down payment. You don't need a loan. And you don't need to be a landlord. You just need knowledge, patience, and the right platforms. The world of real estate has evolved. The gatekeepers are gone. And now anyone, yes, even you can start building wealth from real estate today without owning a single property. So ask yourself, what's stopping you? Because the sooner you start, the sooner your money starts working for you. And that's the real meaning of financial freedom. If you found this video helpful, make sure to hit that like button, subscribe to the channel for more smart money and investing insights, and share this with someone who's ready to grow their wealth in 2025. Because the future of real estate investing isn't about ownership, it's about opportunity. And the opportunity is here right now.